Chambal Fertilisers has been in the news. The board has approved a buyback of up to 700 crores at 450 rupees a share via the tender offer route. The company's promoters and the promoter group has expressed an intention to tender their shares under the buyback offer. To discuss more on this, we have Abhay Baijal, who is the managing director of Chambal Fertilisers. Mr. Baijal, good morning. Will the promoters be participating in this buyback, and what is the cash on your books currently?
The promoters will be participating in the buyback, that is on pari passu basis. And in terms of the cash in our books, we have something like, which is projected as of end of March, is about 1,500-1,600 crores.
Got that. Mr. Baijal, good morning. Could you tell us how has demand been in the third quarter, and has Rabi sowing improved significantly in January?
So fortunately, we are in an area that is very well irrigated, and we have so far faced no demand issues insofar as any of the fertilizer products that we are dealing with. And so far also in the agri, the CPC, what we call crop protection and specialty nutrient space, most of our sales have gone through smoothly. And there was a slight delay in sowing, which has caught up right now. I think towards the end of December, that deficiency was made. So I think we are pretty good on meeting our targets in terms of sales.
All right. Hi, Mr. Baijal. I wanted to understand how the channel inventory is currently. What we understand is that it continues to be high for both fertilizer as well as crop protection products. So how are we seeing it currently, and how will it impact your volume growth for the Rabi season?
See, the Rabi season is more or less over. It ends by 15th of January for us. So as far as we are concerned, mostly it's done and dusted. Most of our volumes that we wanted to bring in and sell has been done. We are now actually preparing for the next season. That is the situation.
So there's also been a revision in gas costs recently. How did gas costs pan out in Q3 versus Q2? And generally, what are raw material prices looking like? Are you seeing any pressure on margins because of that?
See, the real issue for fertilizer industry is availability on time, because it's a very seasonal industry. As far as my knowledge goes, two or three major items are phosphoric acid or phos rocks and so on, insofar as and gas. Our gas supplies have not been interrupted. We have seen no reports either from GAIL or IOC saying that there is an issue on LNG supplies. We have also understand that they are taking alternative routes from Cape of Good Hope. So there is some delay. And also there is an increase in freight cost and insurance cost, war risk premium and so on. Now that is impacting how it will go forward and impact the prices. I do not know. At the moment, my understanding is that most of the producers are taking the hit by lower netback.
Right. Mr. Baijal, will there be a bigger impact of the disruptions we are seeing in the Red Sea route, trade route?
No, I do not know the situation, how long it will last. Supposing it is over by 31st of January or so, it would not leave a lasting impact. But as far as if it continues and goes up to March or April or flares up, for instance, then there could be a long-term impact which is spread into or go into the Kharif season. As I've told you, people at the moment, either they are producing or they are importing for stocks. The sales impact will be known only by Kharif. But if the normal price of purchase has gone up, or there is not as much material available, then there are disruption issues which could happen. So that is what is more important, that whether the supply chain is maintained.
All right. Are there any outstanding subsidies from the government?
I would say that we have been very comfortable because the government was well provisioned in terms of the money. And my understanding is that at the moment, what is due is the normal amount of about 2 months or so outstanding, which is the normal course because the material goes into the point of sale machine, then it gets sold. And you would realize that when I told you that this is the end of the Rabi season, application of fertilizers would normally not happen. We are accumulating stock into the system at the moment. So it will start getting liquidated from April onward. But at the moment, whatever is due in terms of whatever bills that we have to raise, we are very comfortable on that. And if you were to treat that as debtors at the first point of sale, we are there in terms of 2.5 to 3 months, 2.5 months, which is normal for this period of year because we are end of Rabi.
Well, we appreciate you detailing your business, sir. But from an India perspective, the next big event that we're looking forward to is the union budget. What are your expectations?
So I would say 3 things out there. First of all, the fertilizer industry is faced with a peculiar GST issue. What happens is that the output is a lower base for tax because there is a subsidy element there. And by law, you cannot apply GST on subsidy. You can only apply GST on MRP. This is more so in the case of the phosphatic and potassic fertilizers, not so much in urea. So what happens is that you keep accumulating GST into your system. And unless you have a business combination which you can use to take that out, it will ultimately result in a loss of GST because the auditor at some point of time will say that your past 3 years or 4 years doesn't seem to be recoverable and you are continuously accumulating. So you will have to take a hit in your books, although technically you can carry on the credit for indefinite period. The second thing we want the government to look into the period that there's a election coming up and there will be kind of stasis in terms of futuristic demands. They should make adequate provision for subsidy for the year 24-25. And number 2, they should make adequate provision for the first quarter itself, so that in terms of the cash flow, the companies do not get stuck up. And I say that the third demand that has been a long-standing demand of the industry is that they should press the button on DBT 2.0, whereby the government pays more or less to the farmer directly and changes the mode of payment, not through the company, but directly to the farmer. That will introduce a whole new dynamic into it.
All right. Mr. Baijal, thank you very much for joining us and appreciate you taking out the time and speaking with us here on CNBC-TV18.